Hello and welcome to another edition of Capital Calculus. I am your host, Anil Padmanabhan. Little over a week ago, President Donald Trump imposed additional tariffs on imports from Canada, Mexico, and China. He then walked this back in part a few days later. Regardless, this has unleashed shockwaves across the world. The thing is that this is part of a pattern, one in which the US is gradually retreating from multilateral forums like the World Trade Organization and preferring instead to flex its extremely impressive economic muscle with the rest of the world. The idea is to make America great again. This, in turn, is unleashing a massive reset in the world order that has been in place for the last 70 years. How will this impact the world in general and emerging markets like India in particular? To answer this and more, I spoke to the US based Murali Balaraman. He is the founding partner at Sempreverde Asset Management and former managing director and global portfolio manager at Blackrock. I began by asking Murli whether the US decision to impose additional tariffs was risking a global trade war.
I guess by definition, we are at the beginning of something. I'm not sure I will necessarily call it a war. Maybe a skirmish, a spat, whatever, but definitely a trade disagreement, and that's happening. Unfortunately, the way policy is being it's somewhat whimsical. So, something's announced and rescinded the next day and re-announced the third day. So we don't know. Of course, more is promised as well, right? The reciprocal tariffs against other countries which have tariffs. So yeah, there is disagreement, and I think the only thing that is helpful in understanding where we are and where we are going is probably to look to history and context, and you have to remember that in the first term, when tariffs were announced, very soon after there was an agreement, especially with China. And China agreed to buy certain things, and very soon the tariffs were lifted, and probably never heard from for the rest of that term. And with Canada, Mexico, similarly, the USMCA was announced. So is this something that's the start of a long-term trade war, or is this something that is a way to extract some benefits to the US? Remains to be seen.
So, Murli, well, you may be right that he's probably speaking to his domestic audience, and especially since he made it central to his campaign. But in the short run, too, there is a potential inflationary impact given the fact that the US imports a large chunk of these commodities. So, how do you see that playing out? And please remember that the world in general is barely recovered from a bruising phase of inflation.
Right. I think that's fair. Is it inflationary in general? Historically, tariffs have been inflationary. If a small country, by which I mean a small country in terms of GDP, imposes tariffs, the cost of importing that particular product increases to the landed buyer, and that is passed on to the user, and that's the inflationary mechanism. So why might it? And so it is fair to assume that there will be some level of inflationary impact from these tariffs. Why might it be slightly different? The reason it might be slightly different is the dynamics, the power dynamics of the size of the country that is putting on these tariffs. US is the largest economy. When they put on a tariff, the person selling into the US, whether it's a Chinese manufacturer, Canadian or Mexican, probably sells a big chunk of their sales into the US. It's a huge market. And if that market suddenly were to go away, there's a fairly high possibility that that company might go bankrupt. And so in order to stay in business, if you're a small business owner and you're up against a large manufacturer, what do? You say, okay, there's 25% tariff. I understand you can't pass it on. I'm going to eat some of it. I can't take all of it, but I will reduce my price. Call it, and I'm throwing a random number out there, 5 to 10%, and I'll try to take my costs down, and I'll figure out at my end. But at least I have the company going. I have cash flow in. There's two other things to remember in terms of how tariffs end up with prices. The adjustment mechanism, first part is what I said, which is what does the seller do. The second part is currency moves, right? So there are foreign currency adjustments in freely floating currencies, and if the when we already seen it, we have seen it for the last several months. These currencies start to depreciate. If they start to depreciate, again, the price for the in the US sort of goes down. So there's part of it that will be handled. Now there are second degree effects of that. We'll not go into that. And then the final thing is what you said, which is inflationary. How this breaks up might actually go down to product by product, right? You said commodities. Yeah, commodities can be replaced, but it's not so easy as switching on a switch. And frankly, inflation is there for a worry. But disruptions to supply chains is even bigger worry, and that's something that you mentioned. We coming off inflation, and part of that inflation was caused by COVID-related supply chain disruptions. So yeah.
So, Murli, while staying on the macroeconomy with respect to inflation, if we look at other parameters, we get very confusing signals. I'll just list a few. The S&P is falling, which oil prices are falling, not so dramatically like the S&P. The crypto is falling, most cryptos, not all of them. The All of this suggests that the world is losing its risk appetite. On the other hand, gold prices are skyrocketing. It's poised to achieve a lifetime high of $3,000 per troy ounce. It suggests that inflation is a threat or it's a hedge against some insecurity. Then you have AI, which is threatening once in, like people are comparing it to the industrial revolution, the kind of disruption that we're looking at. So, what does all of this put together tell us about the state of play for the global economy?
Right. I think you want to throw Ukraine and what is going on there into the mix. Well, let me take it in two parts. One is I'm going to push back on what you say in terms of some of these financial assets declining, because you got to put it in context. The S&P, you said, is declining, and that's fair. But what is it? It's down 2% or less. I think maybe 1% at this point year to date. After 2 consecutive years when we had 20+% returns in the S&P, and long-term historical trends have been 7 to 10% sort of returns. So we have compounded at significantly higher than rates. These are equity markets. There are underlying cash flows. There are concepts of valuations, and they will go through ups and downs. And so I'm not sure they're declining. Same with, you said, crypto and Bitcoin. I mean, those things are up 4 and 5-fold or more just in the last several years. And so you have to expect that there will be some level of corrections that will happen in the natural course of events. And therefore, what is a catalyst versus what is a cause is sort of important to separate in this case. This may be a catalyst that is causing some of these. Is there a causal effect where there are concerns? Yes, but those causal effects and concerns are not necessarily just stemming from tariffs. Tariffs is adding one more layer. I think there are concerns. If you look at the US, for instance, there are concerns about how much fiscal support there has been and how much that has helped the growth. And that has to end because it's just unsustainable at this point. And so there is a natural expectation of slowing. Equity markets are somewhat on the expensive end of where they have been historically. So you can make the argument that these are all natural corrections. I don't disagree with your point, though, whether you take that or gold, that are these all indicating that there is some trouble? Yeah, because we're literally changing the plumbing of the world economic system at this point. And so there has to be uncertainty, and uncertainty always results in financial markets in some decline and loss of risk appetite, as you put it, and some declines. So yeah, it is fair. It is reflecting that. If this turns into something more serious, then we are in very early days of this correction. So I'm not ready to sort of call this by itself a risk aversion yet.
Actually, that's a great point, Murli, you made about the plumbing of the world is being reset. And here I want to draw your attention to one very significant aspect of this plumbing, the American exceptionalism. They, it is only going to grow stronger because it is uh, the world's largest economy by miles. So they have the wherewithal to expand that American exceptionalism. But there's a big change here. There's a fundamental pivot. Previously, this was leveraged for the US to lead the world or to anchor the world. Now the US is pivoting to a argument that what is best for America or make America great again, and it's looking at their self-interest. So, how do you see this shift impacting the world?
Well, I mean, look, I totally agree. I think that there is a change in mindset, and like I said, the fact that the tariffs that were imposed by the first Trump administration were not removed by the Biden administration, that suggests that this is something that is a trend shift that is not necessarily just political from one party. There is something going on which is deeper, and probably angst about where we are in the economy. So yeah, I mean. It, if it comes down to pure this is business between countries, and there is no um, moral ground that we're going to stand on. It's just how business is done, and we're going to do business with you. That is what trade is. It is plumbing, and it is replumbing, but I'm not sure it necessarily changes a whole lot of things. At the end of the day, US is likely to import things. It's just going to potentially change direction, and Canada was, or China, or Mexico, or even Europe for that matter, was probably going to import certain things, and they may have to do it with the US, which means some other trade will be rerouted somewhere. Plumbing, if you change plumbing, that's what it means. You're just rerouting everything. So I'm not sure it necessarily means in the immediate realm a huge change. What will be important is what happens over time, and I suspect the wild card here may be Europe.
But Murli, you have to see this in tandem with a lot of the actions which the US has been taking, not just in this presidency, but in the previous one too, which is retreating from multilateral forums.
Mm.
WTO is an obvious example. Trump has now taken this to the Paris Agreement, and similar noises are being made with respect to IMF, World Bank. So, if you connect all these dots, it's very clear that the world is actually looking at a situation which has not existed for the last almost 70 years without the US as an anchor. It's completely new territory. So, how do you see this playing out? If you look at the medium term.
You stumped me there. I think that's a great question. My best guess is that that leadership will evolve. If you think of the world, well, we went through Cold War, we went through a non-aligned movement, we went through Europe. Europe came together as a single market. Brexit. We've had mega changes in terms of how the world is aligned over time. It happens every couple of decades, or if not sooner, and we will potentially end up with a realignment of nations and leadership. I do think that it could potentially be a setback to some of the initiatives that required one driver, one big party saying we've got to move in this direction, and using the muscle of their size to move it in that direction, which would be in general, I think, unfortunate. But let's not read too far into it. I would slightly disagree with you that it has been through administrations. I think there was a major effort in the previous one to sort of re-engage with all, and in fact provide leadership in a lot of these multilateral forums. Climate Paris Accords and other things. So I'm not fully on board with saying that it has been changing, and I think we'll have to see. I do think it's a lot of uncertainty and potentially a setback, but we are right in the thick of it, and so our ability to judge looking forward is going to be a little clouded in this moment.
So, okay, Murli, Ray Dalio puts this very interestingly. He says, given all that we discussed, that the world is going through a time warp. So he says that he doesn't know what the world will look like in 5 years. How do you see this claim?
Yeah, no. That's sort of what I'm saying, right? We are in this situation where we are trying to publicly and very visibly in the change all sorts of things without having first experimented, without having first figured out what happens if we do this on a certain assumption and a certain theory which has not been stress tested or academically tested rigorously. So there is so much uncertainty that there was a Fed governor yesterday or day before, one of the governors of the Federal Reserve Bank, who said this very well, and I think that best describes it from my perspective. He said it is very hard to come up with a base case today. You can do scenario analysis, but you just don't have a base case. So we just don't know what we should think, how we should model what will happen, and what 5 years down the line looks like, because we things are still evolving. There is going to be change. Sounds like the US is going to be a little more business like in many of these things. I'm not convinced that it will actually reach its endpoint, primarily because of the demographics of the U.S. It is actually an aging society, and population growth is practically come to a standstill, ex immigration, and so it actually cannot take manufacturing back. It is going to be very hard to do that. We are at near full employment at this point. So how do you if you take a factory back, how do you get people to work there? And so just for that reason alone, I don't think the end point of these changes will be reached. And so we may be surprised by how little things change. But the level of uncertainty in saying that is very high.
Which means emerging markets, particularly a country like India, which is desperate for resources, uh, is going to have a challenge in either situation. If you have the kind of disruption we are anticipating, then the risk appetite is going to, like you said, diminish, which means EMs get impacted. And if US fails to correct its fisc, the rates remain high, which means foreign inflows are not going to go back to the levels that we saw even a year ago.
Right, right. Yeah, I mean, India is in an interesting position, isn't it? A lot of the Asian tigers already went through their growth. China had its growth. India is currently in that phase, and so to see this change in the piping or the backdrop of the world system is challenging at the very least. But it's also potentially an opportunity. I mean, to me, I think India has reached a point where there's got to be some serious discussions ongoing about do we really need to have a tariff? Can we have an open economy, and what are the pros and cons of that? And so, yes, there are potential risks on the horizon of especially of capital flows sort of slowing down, at least in the near term. Now, I'll caveat all this by saying all of this could change in 6 months' time. We could have reversed all of these policies. So that uncertainty exists. But assuming that there is some sort of a more closure and less trade, then to some degree, yeah, there is a risk of capital flows slowing. I think it is naive on the part of the US and other places, the US with such a lot of foreign debt, to assume that we can sort of make these tweaks on the trade system of goods, but we assume that capital flows will continue in the same way. Well, they will not. And so U.S. deficit has to be funded too. So there's again a whole lot of these moving parts. Yes, there will be a drop in risk appetite in the near term. Whether that translates into the same in the medium term remains to be seen. Anil, I'm not copying out, but it's just there's just so many moving parts here that and so much happening that we need to see where this goes. Sorry, one last thing. If the financial markets, we've seen already, if the financial markets react negatively, whether it's the bond market or the equity markets, it does appear that this particular administration is very sensitive to any poor showing in that. And so there is a circular loop here. So if any of these things happen, if risk appetite goes down, reflects in lower equity prices, for instance, etc., some of these policies might be reversed faster than you think. So again, yeah.
So basically, fingers crossed.
Well, fingers crossed. Yeah, exactly.
Murali's concluding remarks sums up the global mood, or rather the global sentiment, which is one of uncertainty and fear of the unknown. It is very clear that the world order as we have known for the last 70 years is undergoing a massive reset. What will emerge, nobody knows. And there is no playbook that the world can rely on to deal with the kind of changes that are being unleashed. If anything, the changes that we have witnessed in the last few years, beginning with the COVID-19 pandemic, is a sign of things to come. Undoubtedly, this will test the leadership in all countries, including India. Thank you for watching. Don't forget to subscribe to Strat News Global on YouTube. Hit the bell icon so that you don't miss any updates. And please do share your thoughts, ideas and suggestions with us. I'm available on Twitter at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.